So it's an hour before the US stock market opens, and what am I doing? Well, it's a beautiful day out here. I'm in the Peak District and I'm getting some exercise. This is my exercise hour before the US Open, and some more trading. And you know, this is what trading's all about, isn't it? It's enjoying days like this. And had a good afternoon yesterday on the Dow, and I'll be having a good afternoon whatever the outcome this afternoon, because I love trading, and this is one of the reasons that I love trading. Just look at this. It's cold, but it's clear blue skies, no wind, and all's beautiful in the world. All's beautiful in the world. I'm a self-taught trader. I modelled professionals. I spent several years learning my art and I perfected it. And now I teach other people to trade, and what better way to spend your life? So apart from exercising my body, what else am I doing on this walk? Well, I'm exercising my mind. I'm rehearsing my trading strategy in my mind. I'm picturing in my mind and almost playing videos of successful trades, or even just trades where I've entered and exited correctly, whether it was for a win or it was for a loss, because losses don't matter. They don't matter as long as you're trading by rules. And the reason they don't matter is because you set rules and have a strategy that over time makes money. And for me, that means taking quite a few trades every day, which means that almost every day I've got a winning day. And so I'm rehearsing those strategies in my mind. I'm rehearsing what I'm going to do, when I'm going to do it. I'm rehearsing what I'm going to look for in the charts to take those trades. And I won't enter unless I see what I need to see on the charts that gives me a good probability of a successful trade. So on with my walk now. Very muddy underfoot, and who cares? Beautiful sunshine. Beautiful sunshine, and I've got to go through that. So I hope you saw that. I'll be turning off for a few minutes and then I'll be on the charts. So I've dusted off myself from my walk, and the Dow, the US markets are about to open, and I'm all ready. Now, looking at the charts, not particularly enthusiastic at the moment about anything. This is the Dow 5-minute chart. This is the 1-minute chart just opening now. Keep a quick eye on it. Obviously been in a downtrend, but two big green bars that indicate bullish intent. And here we go. Too far here. That was an opportunity potentially there, but too far from the EMA, the 8 EMA, when this candlestick opened. Not too far now, and people will look back on that and think, I should have gone in there. But there was a big distance, nearly 20-point distance, between where the candle opened and the exponential moving average. As you may know, I'm keen on getting in at the averages, or thereabouts at the averages. 20 points is a bit far. So, missed opportunity if you like, but got to keep focused, because there's very often some kind of pullback after a big breakout like this, and I'll be looking for price action to go down to the 8 or the 20 exponential moving average before I enter, and I'll probably be entering long. Look at this now, it's broken the trend line. This was after the open, so no real trade on the open. Some people will have gone long, you know, it was accelerated very quickly. These are big distances between bars. That's 50 between prices. This is 50 points, which is, for an indices, that's quite a lot, and that's 20 points difference. So good rewards for people getting successful. be getting the direction successful on these trades on the open. You know, there you go, 50 points difference between the numbers here, and so that's a nice amount of volatility, and I'm quite keen to get in, but there's absolutely no chance that I'll be going long up here. Absolutely no chance, and I'll tell you why. You know, in the past when I was starting, I'd have thought, wow, look at this, it's going up massively, I've got to excuse me, I've got to get in long. And no, that's called the greater fool's theory, which the greater fool's theory is that you're assuming if you go long here that there are greater fools than you that are going to buy further up, otherwise price is going to go back down. And what you normally expect is that the price doesn't go too far away from these averages. This again looks like, you know, that it's gone up now. So there was a 10 point, 15 point win in there for anybody who didn't believe in greater fools. But look how far this bar's stretched now. Big move upwards, 100 points in 5 minutes. And all without me. Now I am feeling as though I'm missing out here. I can feel it inside me, and you may recognise that feeling. I feel a little bit disappointed that, you know, I've been recording this and I've not been able to take a trade, and you know, that's disappointing. So I'm waiting for price to come back down here, but it'll need to be the right sort of price action before I take a trade long, because it could be that price comes straight back down and goes all the way down here. Unlikely, more likely it comes down to this level here or just below and then bounces up, and that's what I'll be looking to trade. So, you know, these highs here, it's broken those highs already, so I'll expect that, since that resistance level has been broken, that it would be non-existent as price goes through again. So there you go, actually it's coming down to that level now, and this is looking good for a trade, so I'm going to get ready here. Gonna get ready. It's coming down to the average. Getting ready. Getting ready. Getting ready. This bar here is quite strong, but not hugely strong right now. I'm going to wait for it to go, this candlestick to go red, and then bounce there. There we go. Right, so we're now long, and I entered as price was falling here. As price was coming down, there's a risk with that because it could continue going down, but I'm betting that it won't, and I'm betting that it won't. There's a round number here, 30,900, which has been fairly significant over the last few weeks, and there you go, it's bouncing now. I'd expect it to reject off this level here, this EMA. Expect it to reject. This is all looking very bullish here, which is great, and we just need it to start. That's almost a pause bar, and I like the fact that it closed above the exponential moving average. If we get a close below the exponential moving average, I'll probably exit for a loss, but I don't expect that to happen now. I expect this to be a winner. It's gone from red to green, and I need to make sure that I'm going to be getting 1-to-1 out of this trade. So see this distance here, I've got to be expecting, I've got to be getting that in terms of a reward. This went down to -900. I've got to get more than that as a reward, and I expect this to be a winner now. So just going to see what happens. Notice the tails at the bottom here. That's a good sign. Right, now it should go. That's where I should have entered. And it's just pausing. Just pausing. You know, when price has gone against you when you've entered and you've been in a losing position, and then it comes back to break even, there's always a part of you that kind of thinks, "Ooh, I should get out now. Don't want it to go back down again." And it did go back down again. But the price action is so solid above these exponential moving averages. I'm very confident that this is going to be a winner. Even more confident if it breaks this high here, which it has done. And now let's see. Another close above the average, which is great. And now go. Now go. Oh. It's struggling to get up there. But I think it's going to go through. We're getting higher highs in this little run of there. Okay, now we're going to be getting out around about here. There we go. So, successful trade. About 1.2 to 1. I was down 1,000 here. And when I exited, it was £1,200 up. So a good trade. So, you know, you've got to understand your price action. When you're in a trade, you've got to pay attention to what's happening to the candlesticks and ignore the money. The only reason I looked at the money was to see how far down I was, so that when the price went in my favour, I could make sure that I got more than a 1-to-1 reward to risk. That's the only reason. So a good trade. Keeping to my rules, and making sure that my equation, my trading equation, is correct in terms of the reward and the risk, and happy with that one.